Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, June 16th, 2021. Sorry for getting this one out late. The last couple of days have been busy. Tomorrow will be as well. Quite a few things going on, appointments with the house, the boat that it was supposed to come in 4 months ago. I've talked about that on this before. All the parts on back order. In fact, the boat came into the dealership and it's still missing one part. So it's been, again, a boat that was supposed to have been delivered in February. So that's what's going on with me. Tomorrow I've got a couple more appointments. I'll be in and out. One's in the morning, the early morning, one's late morning. And I just want to let you know that's why I have kind of been MIA other than that one post today. So here's what we're going to do. Relatively quickly, I'm going to do an update on the markets. Today was a Fed day. So we saw the usual post FOMC noise, I call it. You get it's almost, you can almost bank on it after an FOMC announcement, and then Powell will talk. You get a reaction, usually a sharp reaction in one way. It can be to the upside, or it can be to the downside, and then almost always you're going to see a snapback and a reversal of that. And you never know which one sticks. It could be the initial reaction, the second one. But anyways, I'm going to show you the levels to watch. So let's dive into the charts. SPY, this is a daily chart of the S&P 500. We are right on the BOD, benefit of the doubt line. That's that purple line there. Again, here's your primary trend line off the March lows. I always do this to recap for those that haven't caught up in a while. We broke our primary uptrend line from the March 2020 lows, and we were back testing. We just kind of stalled out. Momentum has stalled. This is why these are your momentum indicators down here. There's many out there, but these are my two favorites, or go-to, PPO and RSI, and they're showing you by making lower highs versus these previous highs, with the stock market making higher highs. That's what we call negative divergence. And so far, we're right. We hit it right there today. Hit the bottom of the, or hit the trend line, what I call BOD, benefit of the doubt trend line. And so I still think we'll get a sell signal there. We'll look at futures real quick. Let's go ahead and do that. And before I do, let's just look at QQQ, see what that looks like. I have different boards on QQQ, but that's the current uptrend line. So that one's been taken out right there. This is our uptrend line on the daily chart on QQQ. You can see it on the 60-minute chart. There's our wedge type pattern right here. Oops, I did not mean to grab and move that line. I meant to use the draw tool. There we go. That's a bearish rising wedge on the 60-minute with divergence. Recently big overbought reading right there, and boom, breakdown today. So that's a sell signal. I'll call it for what it is, but let's look at the futures real quick, and then we'll move on. Let's start with ES, the S&P 500. Because we really need to see that one break down before we get a good correction in the stock market. And it did. This is the 60-minute bearish rising wedge. I posted this today in the update earlier today, along with some other charts. And that's what you want to see. That is a breakdown. It's impulsive. So you get a check mark right there on the 60-minute time frame. But again, on that daily time frame, you're going to need to see just a little more downside, because remember, we tagged the benefit of the doubt trend line. But it always starts with the shorter term charts, the 60-minute charts, sometimes 30, 15-minute charts. Any correction's usually going to start there. And then that can trigger a bigger drop that then starts triggering sell signals on the more significant daily and maybe even weekly chart. But that's it. So I'm going to call it for what it is. That's a breakdown, and it's unmistakable. Doesn't mean it's going to stick, doesn't guarantee it will, but it certainly increases the odds in my opinion. We hit these first two. I won't even call it a target when it's that close. This would be your first target, really, 4206 that I laid out recently, and then 4170, we'll call it 4171, and you can see some additional targets. So that's what it looks like on the S&P 500. NQ, NASDAQ 100, we're going to go here, and that one just caught it. Remember the other day, or yesterday, when I did the video, I showed you that the S&P was much closer to breaking down to the trend line to support, and NASDAQ had a way to go. Well, so far NASDAQ's catching up, but it still has just a little more work to do. So you have 14, this horizontal line I just drew is 1446, give or take, and that was significant to me because that was the highs right here, and just recently we had a breakout, and it was what bulls want to see. It was impulsive, a big green candle, but then you have what the bears want to see, and that is a failed breakout. So what happened, I'll zoom in nice and tight, there was a lot in the chart. You had the divergence and everything on the breakout, and that's why it's a breakout that I would have passed on because of the negative divergences and overbought conditions. And then you back tested for a while, roughly right on that, call it 1446 level again. And then boom, it all failed. So that is a failed breakout, this drop today. Now, you always have to put a little, everything that happens on a Fed day with a grain of salt. But the thing is, over the next couple days, the market will then have time to fully digest everything the Fed said and did, and then you'll see the next direction. But bottom line, let's just go by the charts right now, and that is that we pretty much. And this is showing the after-hour trades. This is where the futures are right now on trendline support. So if the Nasdaq bounces, we'll just continue to watch for a break of this uptrend line, and that'll be the next sell signal. My targets are 13,737-ish, 13,455, and 13,377. Call it. That's really more of a second target zone, with this being the first target. Again, with a sell signal pending a break of the trend line. And again, we had a whipsaw, but you can see that's also why, I always talk 60-minute chart. You wait for the 60-minute candle. This was post-Fed, went all the way down here, but within that candle, they reversed it all the way back up to effectively get back on the trend line. And you can see right now, these candles were just a hair above. Here's a quick look at RTY, the small cap ETF. Something happens. Every now and then these lines that just sort of vanish, and I'll have to, and then I have to restart the program. So I just drew in these lines here. I don't have all your targets, but again, I believe I posted one earlier today on the Russell 2000 futures. Again, that's RTY, and you can see the breakdown there. All right, let's move on to different things. We'll just look at what the financials did. XLF right here, pretty much flat. This is showing after-hour trades. I'm not sure exactly where we closed, but roughly flat. They rallied at one point during the FOMC meeting, but you can see this is a clear downtrend. So the sell signal is very much intact. Really no need to spend much more time on that. Nothing changed there today. KRE, little snapback rally, but still below trend. That's the regional bank ETF. XLF are the big financials. Let's talk on gold real quick. Do a quick update there. Beautiful action in gold. Actually, when I left this afternoon, before I left, I had a fill order right there just above that 1802. I think I did 1807 to close a short and reversed a long. That was that target I gave you yesterday. In fact, the last subjective short was highlighted right here the other day in a video. First on that, breakdown there, expecting a bounce on the initial tag 1848, which we got. Bounce back to resistance. Mentioned that as an objective short entry, and said the next time we come back here we'll probably go through it because we already checked it once. And so if you're an active trader and you're trading gold futures, that was a quick 3.6%. And again, this is a pretty good support, so we already had the reaction, so I'm not going to say I'm expecting one. We already got it, and that's it. And where to? If you get it back up here, and I'll have to reassess this after the video, see where I'm going to close that one out. But I think I'll just trail up at this point and then sell if it gets right here. Here's the thing. I may just trail up and let it go at this point, and I'm kind of leaning that way. Why? Because first of all, I'm still bullish on gold longer term. I was just looking for a correction here, and you have nice divergence there, positive divergence. So that could lead for it could end up triggering a much larger rally, and it could even be the road to the next high in gold here. So it's pretty easy. If you reverse there, if you went long on that bounce of support, you can either just set a stop there, raise it to entry, and you guarantee no loss, at least a break even, or trail it up, let it run, or get the quick bounce back to that 1848-ish level, and watch, rinse, repeat, that kind of stuff. We say how it never fails to amaze me how two different securities that have kind of nothing to do with each other. This is dollar, this is a currency, and gold is a commodity, a precious metal. But yet, gave you that target on gold yesterday, which was hit to the button today, and we reversed, and look what the dollar did. Hit my 91,373 target. So this was our breakout back test. I've been bullish on the dollar since back here. and you can see how it's traded off these levels. It hit that 95, 92 target, pulled back, traded here in this range, and then once it took out 95, 92, as expected, went up, hit the next target, 90, 80, blasted right through there today. Bigger move than usual because again, FOMC announcement today. But that is just right there another reason to either close a long on the dollar if you're an active trader, book profits, or at least raise your stops, trail them up pretty tight, and or like I said, take profits on a short on gold or go long because we're probably going to get a pullback in the dollar from here because we're right at that support right now. And a quick look at DJP, the broad-based commodity ETF that I've been tracking, using that as a kind of a proxy for the entire commodities arena, and it continues to go down. It was last pointed here. It's hitting the top of the channel, and then followed by a break of the trend line there, and we're working our way down to what I believe will be a move to at least the bottom of the channel again. You had negative divergence, and that could lead to a channel break and take us down here to 23.33. Just something to note, commodities remain under pressure lately, and again, that's perfectly normal bull market action at this point in time because they were very heated, very overbought. There's been some of the biggest runs in commodities in many, many years, and in decades in some cases. So that's it. So I'm still looking, for the time being, near-term bearish, looking overall just a little more softness in commodities for now. Okay, I had to pause the video there for a second to do something. And that brings us up to natural gas. Natural gas was most recently mentioned as a short trade here. We had this small divergent high. Targets were this, first target, or that was support. I'm trying to recall where I first posted it, whether it was at that, and that would have been the next sell signal. But it took it out. That took out that 327 and hit that 31, we call it 320 target right there, and I'm still favoring a move down to this trend line. So the way this works is the initial leg down, we hit support, that 320 level, bounced back to former support, now resistance at 327, and probably take another leg down here. And again, this one could be a bigger runner trade. It's pretty small divergence right now, or was at that recent high. But with natural gas, you never know. You can get a big runner trade. So what you can do is either take profits. I mean, look, we came close enough to that trend line, and now at this point, if you look at it this way, if we hit it soon, we're going to just be about where we were when we overshot that 320 level. But what I was going to say is you can set a tight stop. Relatively, tighter it is, the more chance you have of being stopped out, but the less profit give back you get if it goes up. And then try to hold out for a runner trade. Next targets would be about 306 and so forth and so on down to here. This would be my max target, 2909 or 290 right there. And next up, crude oil. Crude oil, we have that nice clean bearish rising wedge, a lot like the indexes. Crude tends to move with the market, and so I'm still favoring a breakdown. It's starting to crack a little here, and later it's up at 6 p.m. now, a little after 6 o'clock. But you have this first target here, still 70.63. I think you can make out the levels in the video. 69.76, but I think there's a good chance crude's going to come all the way back here to that 66.63 level. The minor zigs and zags along the way. That's why you have those support lines. So that one's ready to pop. Divergent high right here, just like you had a divergent high at this point. You had a correction, then you put in a divergent low, rally, so forth and so on. Divergent low, rally. Then so that's crude, and then last but not least, let's just do an update on AMC since that one's been moving and certainly in the headlines lately. AMC, I'm going to go to this 15-minute chart. These are the levels I'm watching. We had this trend line here. We broke out recently, gapped up above it, but ran in 60. That 60-ish, I call it. 60th resistance is a brick wall, and so far they were rejected. In fact, we even got a little above it and then fell back below it. So that's a big level. AMC can run if that gets taken out. You have these previous reaction highs, which eyes will be on But we could blow right past there if we take it out. Now, I don't think it is. I think the top was in an AMC right here. That's my take. And this right here, this is the trend line. Let me clear everything else out. This to me is a big level right now. That's that triangle I showed you the other day. I extended that trend line. We have a lot of reactions on it, and we have price support there about 51.60 and then 47.33. So pretty much, if let's just call the 51.60 the benefit of the doubt level, because we break the trend line, then you have that below, and that should bring the stock down here to 37.63 and quite likely 32.22. And that still would be a big drop. And again, these are just initial targets. Ultimately, I see a lot more downside. That'd be about a 42% drop. All right, let's wrap it up here. I'll get the video out to you guys. And again, my morning's pretty much booked up. I'm in and out between appointments, and then I'll be back in the afternoon, and we'll highlight anything that stands out. This has been Randy Finney with Right Side of the Chart. Have a great evening.